Hi, friends. Thanks so much for joining. So, I'm going to dive right into it. We're at this crucial juncture. Some of y'all have probably heard me say this a bunch of times already. I know Brian has probably heard me say this a lot. But at this stage, we are 6 days away from the next Bitcoin halving. And I want to talk about why this is such an important time. And then I'm going to walk us through a little bit of history regarding the previous Bitcoin halvings. This is going to be the fourth Bitcoin halving in total in the over 15 years of Bitcoin's existence. And that matters because historically, when the Bitcoin halvings have happened, they've kicked off the huge market increases that we've seen in the past. And we would typically see all time highs 12 to 18 months following a Bitcoin halving. But this time is unprecedented because even though the Bitcoin halving is still 6 days away, we've already seen Bitcoin make new all time highs 4 times in 2024 alone. Like, even though the halving hasn't happened, that's an enormous deal. It's a direct result of the fact that a Bitcoin ETF, exchange traded fund, was introduced in the US in January, or rather, it was approved in the US in January. And that just basically means that there are Bitcoin stocks in the mix now. So people who trade the stock market but maybe were reluctant to get involved with cryptocurrency for whatever reason now have a much more familiar, sort of easier way to do that. And so it's just going to mean that more mainstream people who were not involved with crypto in the past are coming into the market, which invariably means that it's going to go up. So like this particular halving may be even more bullish and even stronger. It already looks even stronger than the previous halvings when things already went super crazy. So I'm trying to do everything I can to make sure that giving people working in social good, people who are artists, people with a lot of healthy feminine energy, regardless of your gender, y'all are the ones I want to see benefiting from this, because if you have more resources, you're going to be able to do more of what you're already doing, which is making the world a better place. And this is such a huge opportunity to, I mean, like truly, you could create generational wealth with an opportunity like this if it goes even remotely like the way that it has in the past cycles. And as I already said, there are indications that it could be even stronger. Past performance, of course, isn't a guarantee of future results, disclaimers, etc. But I can't stress enough, like I started buying Bitcoin in 2013. It's never been like this before. It's never been, we haven't had so many indicators pointing toward the likelihood of things moving up in the past. And like I said, as many of y'all know, they went crazy in the past, even without that. So it's a big deal. And the reason I do these talks is to, as I said, try and get this information out to nice people who are doing work to improve the world, and also to uplift Seeds. So if we don't know one another, I'm Rachel. I'm the founder of Seeds, which is a crypto mutual aid project, which has helped people in need in 30 countries and counting. When you help someone in need through Seeds, you receive Seeds cryptocurrency in thanks. And y'all, seeds went up a lot the last market cycle when we had the last Bitcoin halving, which was in May of 2020, which I'll talk more about. So the idea is that when you help someone in need through Seeds, you're receiving Seeds cryptocurrency in thanks, because we want people to have an opportunity to build wealth through giving. We want people to see huge returns in cryptocurrency as a direct result of the fact that they helped someone out when they needed it. So check that out if you're interested. The link is in the description. And we also have a course coming up to coincide with the Bitcoin halving. It's 7 days until the course closes, and I'll share more about that too. The course is effectively free because you get Seeds cryptocurrency and thanks when you sign up and pay up front. And it supports our project so that we can ensure that 100% of the value of gifts that come through Seeds go to people in need. And like, I struggle with this because of my own internalized misogyny, but out on top of that, I'm not aware of any other course, product, whatever educational product about cryptocurrency that is taught by somebody who used to be a career profitable stock trader like I was, who started buying Bitcoin in 2013, who then founded a cryptocurrency ecosystem as I did. And I'm thinking a lot about energetics and feminine energy and astrology and other factors that play into what's going on as well. So that's a perspective I don't think you're going to find out there anywhere else. And I want to share it again with nice people who are doing what you can to make the world a better place. So if that resonates, it's totally meant for you, and please take advantage. Please take action. soon in this crucial moment. Even if it isn't giving to seeds or taking the course, please just get involved in the cryptocurrency sector because now is such a special, unprecedented time, as I said. And like for real, I can't stress that enough. All right, so let's take a look at some of the history of the halving. These are previous halving dates. And actually, let me show you first of all. Let's take a quick look at the countdown. Um, there's this website that you can check out. It's watcher.guru, that shows us when we can expect the countdown. So let's take a look at that real quick. So here we can see as of this moment, it's predicted to happen on April 19th. So 6 days from now, next Friday at 6:31 p.m. Pacific time. If you watch this countdown and check in on it regularly, it's going to vary because they're estimating when a specific block on the Bitcoin blockchain is going to be mined. And that's dependent on the amount of computing power that's going into solving complex cryptographic math problems in order to mine a block, which then generates Bitcoin rewards. That's how Bitcoin is generated. So this is going to change. I mean, it's at different points it said that it was predicted to happen on the 18th or on the 20th, which is the same day as the Jupiter-Uranus conjunction in Taurus, which I think is really interesting because the astrology kind of couldn't be a more sort of obvious expression of the astrology because Jupiter is about building abundance, Uranus is decentralization and tech, and Taurus is about money. So I think that's just a super fascinating thing to also be aware of. So that might change a little bit, but that's roughly when it's expected to be. As I said, this is the fourth Bitcoin halving in total in over 15 years of Bitcoin's existence. The first Bitcoin block, the Genesis block, was mined in January of 2009. So it's been around for a while. And this, again, is only the fourth halving that has taken place. It's called the halving or the happening. More old school people will call it the happening, because what happens is the Bitcoin reward that is generated when every block is mined is cut in half. So it's going to go from, I believe, 6.5 Bitcoin per block mined, and it's going to be cut in half so that the reward after the halving becomes 3.25 Bitcoin per block mined. So that's significant in that it means that supply and demand mechanics are going to be at play. And that's what's happened historically whenever we've had previous Bitcoin halvings. If the entire network is generating, half as much Bitcoin for the same amount or a greater amount of work, then there's a likelihood that demand will increase because supply is decreasing. And that's built into, the mechanics of the way that Bitcoin itself is designed. There are only ever going to be 21 million Bitcoin in total. And I haven't checked this estimate in a while, but when I looked at it most recently, the expectation was that the final Bitcoin of the 21 million Bitcoins would be mined around 2050, the year 2050 or so. So yeah, that's intentional. The founder of Bitcoin, who still remains anonymous, did this um, in an effort to create like a deflationary ecosystem. So unlike something like the US dollar, fiat currencies like the US dollar, which governments just print forever. I mean, they can make decisions to continue printing dollars at any time, and the dollar is inflationary because it's continually decreasing in value. Our buying power is decreasing over time, as we've seen in kind of a more extreme case in the last few years because inflation has been crazy following COVID. Bitcoin is meant to sort of be a counterpoint to that, in that there will only ever again be 21 million in total. So the system isn't going to print Bitcoin forever. And part of the idea there was that it could, create these economic levers that resulted in and have resulted in the price going up significantly. And so that's worked. That's worked for this ecosystem in the past. So that's why this event is so important. But let's now check out a little bit of the history, as I said. I'll take a look at the chat real quick. Hello, Eve. Eve says, are you at all concerned about whales cashing out after the halving? Also, if we sign up for the course and need to cash in some of the seeds we receive, are we able to do that at any time? I'm not concerned about whales cashing out after the halving. I mean, certainly people will try to play the market, but that's what always happens, and that they're trying to see where the high is going to be. Something I think about is like a former professional stock trader, whatever, in when you're trading something that is making new all-time highs. And this is what I would say that any sort of more experienced trader is probably thinking along similar lines, is that you're probably not trying to guess where the high is going to be. Um, when it's making all-time highs, you want to see how far it's going to go, because particularly with something like cryptocurrency, you know, there were people that, oh, yo, okay. So I am from, if you'll uh, humor me while I tell like a quick story that relates to this. So I'm from like a really small, poor town in Ohio. And most of the people there didn't go to college, and most of the people didn't leave the area. And I knew this guy in high school who didn't go to college, and he was working in a local factory, but he found out about Bitcoin circa 2010 or something. And back then you could mine it on your desktop computer, your laptop computer overnight. And the energy consumption requirements were like they were minimal. You could just leave your laptop plugged in or whatever, and it would mine Bitcoin for you overnight. So he was doing that, and he was working in the factory, and then Bitcoin started to go up. And I don't know at what price specifically he sold it at, but I don't think he sold it at more than like $3 a coin or something, because people were so excited that it had gone up that much. It was a huge deal, and we didn't have, it's the first cryptocurrency. We didn't have a template to show us, like, oh wait, there could be much greater potential upside here. And this dude Chris, like, he is, the last I heard, he's still working in that factory in Ohio and like supporting a family and stuff with that job. So what I'm trying to say is that now we have that um, template to look at. We've seen what has happened in terms of all-time highs in the past. So yeah, more experienced traders probably aren't going to try and pick a high to sell at. They're going to want to see like, how far is this going to go? Where is the new all-time high going to hit? And then typically what you'll see is like, you'll wait to see if it's going to retrace. And when it seems like it's starting to lose momentum, that's when people may take profits. So yeah, what I'm trying to say, Eve, is that I'm not concerned about that. The market is so robust now that it's not, I mean, even if Satoshi Nakamoto, the what's the word? Pseudonym isn't the right word. The fake name that the founder of Bitcoin has given, sold everything he holds. I'm not even sure how much he holds anymore. It's probably not going to affect the market enormously. It's been news events like fraud, like with Sam Bankman-Fried and FTX in 2022 and through 2023, that were the big players that drove prices down. And that's because it made people in the mainstream think that cryptocurrency as a whole was a scam, you know? So I'm going to talk a little bit more about various versions of that we've seen in past halving cycles. But yeah, so long story long, I'm not concerned about that. There it's distributed enough that that shouldn't be a thing. And even if it is, we can play off of it. We can keep an eye on what's happening. I mean, you can literally, as I'm sure you know, you can observe, you can like look up the wallets of whales on the blockchain and see what they're doing and keep an eye on that if you're concerned about it. But I'm not personally worried about it. And that hasn't been a thing that has been, I wouldn't say that whales selling has had an adverse reaction of any substantive to any substantive degree in past halving cycles even. So yeah, I'm not worried about that. Eve also says, if we sign up for the course and need to cash in some of the seeds we receive, are we able to do that at any time? Yes, of course. They're your seeds. You can sell them on the market whenever you want to do so. One thing, though, that I suggest, because I had to sell my own Bitcoin in 2013, 2014 to pay bills because of the misogyny in venture capital, I had to sell my crypto to keep seeds going. And if I still held onto that Bitcoin, obviously it'd be worth a lot more today. So what I would encourage you to do is try to avoid having to do what I did. You can redeem a single seed to ask for help when you need it instead and get the funds you need, so that way you can hold on to your cryptocurrency, so you're not paying that huge opportunity cost if things go up as much as they did in the past. And I especially want to encourage women and women of color to do that, because, women, and especially women of color, have less wealth, and the system is designed to not support building wealth, and seeds is particularly for marginalized groups. And so seeds is working to counteract that by allowing you to redeem a single seed, empowering you to redeem a single seed to get the money you need, so that you're not having to sell off your assets to pay your bills. So yeah, Eve, you could totally do that if you want to. Of course, you could sell your seeds whenever you feel like it, but yeah, I would encourage you to redeem a seed to ask for help instead and try to hold on to your crypto, especially now. Especially, I mean, if you can, wait 12 to 18 months or so before you're thinking about selling, because the data shows us that that's historically been when we've seen previous highs in previous market cycles. All right, so I hope that made sense. Let's check out this bad graphic. I'm sorry this looks so ugly, but there aren't beautiful websites with like great UI that have this information that I've been able to find anyway. So if we're looking at the halving dates, you can see here that this is the fourth halving, as we talked about. All right, so I think this is interesting. It's certainly worth paying attention to. So the first halving we can see was on November 28th of 2012. You can see the block reward reduction there. So at that time, oh, I was wrong. So with the fourth halving coming up, we're actually going from 6.25 Bitcoin to 3.125 Bitcoin in rewards. Sorry about that. But yeah, with the first halving in November of 2012, we went from 50 Bitcoin being rewarded to 25 Bitcoin. And we can see that the price on the date of the halving was $12.30. And as I mentioned earlier, the first Bitcoin was mined with the Genesis block in January of 2009. So each halving is roughly 4 years. They're roughly 4 years apart. A little less than that. Eve says, yes, thank you. Oh, great. You're very welcome. Yeah, so $12 in November of 2012. Second halving in 2016. The price was $6.80 at the time of the halving. Third halving, which was in May of 2020, the last halving, the price at the time of the halving was $85.90. Yeah, so check out the lowest price and the highest price in the cycles below, and specifically the dates. So this is worth paying attention to, as I mentioned earlier. So interestingly, after the first halving, we saw the lowest price for that cycle in December. So it looks like it dropped a little bit before it started heading back up. And then about a year-ish later after the halving, in November of 2013, we saw the highest price at about 1170. That's not quite what I remember trading it then. I remember selling my Bitcoin near highs of around 1100, but it was in January of 2014. So this is going to depend. Like the markets weren't moving together as they weren't as strongly in sync when the markets were smaller. So that could be why they could be pulling this data from like a different exchange than what I was using at that time. I would have been using Coinbase, but yeah, so this is about right, and it coincides with my own remembrance mostly when trading at that time, because I started buying Bitcoin in October-ish of 2013. Second halving cycle, July 2016. We can see that in August. So I wonder how they're calculating this. Okay, because this also says that the lowest price in that cycle was in August, so a month following the halving itself. And then this was a little bit longer. So roughly, what is that? July is the 7th month, December is the 12th month. So like 17 months later, we were at highs in December of 2017 at $19,000 400. And then with a third halving cycle in 2020, yeah, it was saying that right when the halving was happening in May, we were at 85.90, and then the highest price we saw, this has actually since been broken, as I mentioned. So before 2024, the highest price we saw was in November of 2021, 67,450. So what is that? That is May's the 5th month. So that's about 18 months following the halving that we saw those all-time highs. But then, as I mentioned, in 2024, with this introduction of the Bitcoin stock, effectively, we've broken those highs 4 times already this year. So the new highs are close to $74,000 a coin. And we just made those, I think, March 13th, about a month ago, exactly a month ago. So y'all, yeah, it's significant. It's a big deal. And I'm going to talk a little bit about what happened during those cycles and what we can pay attention to. But at the end of the day, the thing to pay attention to is the fact that the halving itself is happening and getting involved soon. Like we can see, again, historical data shows us that the lowest price in these market cycles was either right when the halving was happening. And again, the halving is 6 days away, April 19th, or it was like the month following when the halving happened. So like now-ish, y'all. And I didn't mention this earlier in this particular live. I've mentioned it before, but in addition to the Bitcoin ETF that I've talked about, which was introduced or approved in January, there is an expectation that there may be an Ethereum ETF. You've probably heard of Ether. Ether is the number 2 cryptocurrency behind Bitcoin in terms of market capitalization. So that means that the entire value of every Ether out there is second to the entire value of every Bitcoin out there. Market capitalization is the total value of the entire ecosystem, of every coin in that ecosystem. So Ether's number 2. There may be an Ether ETF introduced in the US in May, but it looks like they might fight it, like the Securities Exchange Commission, which has given cryptocurrency a lot of trouble in the US and hasn't done a good job of, I mean, they went after Kim Kardashian for like an Instagram post last cycle while they allowed FTX and Sam Bankman-Fried to like defraud $8 billion worth of customer deposits. So they don't know what they're doing is what I would say. And it's frustrating because it's chasing innovation outside of the United States. And we need clarity around that. It's like they're regulating through what's the word? Litigative isn't quite the right word, but they're through enforcement. They'll say that something isn't allowed when there wasn't I would say sufficient clarity surrounding what the rules even are before they take that enforcement action. And I mean, it's not that I'm a big fan of some of the crypto projects that they've been going after, but it's just not a healthy environment for innovation um, or security because they're not doing a good job of taking care of and protecting people. And then they're also stymieing innovation at the same time. So it's like the worst of both worlds. Um, but that's a tangent. So they may hold that up in the US. The Ether version, the Ether ETF, the Ether stock may not be introduced in May. However, the London Stock Exchange, because in the UK they're more evolved in terms of their thinking about these things. The London Stock Exchange is introducing a Bitcoin ETF as well as an Ether ETF on May 28th, I read. So what I'm trying to say is that even though historical data shows us that the lowest prices in these cycles was either right around the Bitcoin halving or like a month after, because we have these events. Certainly the London Stock Exchange launch it's certain as far as I understand. That could mean that things go up even more so, perhaps even more quickly. We didn't have that as a factor in the past cryptocurrency cycles, so it's something else to be aware of to um, try to do your best to time things and make sure you're buying low and selling high. That's the key to making profits in anything, obviously, let alone in cryptocurrency. So yeah, just be aware that those things are happening too, because they could have a significant impact. Yeah, so let's see here. I want to walk through history a little bit, hopefully in like a non-boring fashion. So I also want to help y'all understand cryptocurrency cycles and when they revert, when they come back around. So in a nutshell, let's see. I started buying Bitcoin in 2013, as I mentioned, in October of 2013. And I had been hearing about Bitcoin for a while, and I literally had a moment where I thought like the universe or whatever is trying to tell me to pay attention to Bitcoin because people from very different areas of my life were mentioning it, people who didn't know one another. Like I remember having that conscious thought. So I did. And in 2013, it had made all-time highs in April of that year. I wish I had a graph I could show you, but price data going back this far is kind of hard to find online. But I remember in April 2013, it hit all-time highs for that period of $263 a coin, if I recall correctly, on Coinbase. And then it pulled back because right around that time, well, it was like September of 2013, so a little bit after the all-time highs. In the US, there was a site called Silk Road, which was like the eBay for every illicit activity you can imagine. They sold whatever drug you wanted, and like you could hire like hitmen and stuff on the platform. And people would pay in Bitcoin because Bitcoin is anonymized. You can transact anonymously. So the feds in the US shut that down and they seized all of the Bitcoin that Silk Road was holding. And the founder of that exchange is in jail and will be in jail for many more years. He's like my age. And I think so. I mean, how old was I? I was like 29 at that time. He was in his 20s. I think he's exactly the same age as I am. So he's going to spend, you know, his, like Sam Bankman Fried, he's in jail for a long ass time. Um, so when that happened, the price of Bitcoin crashed. It dropped down to about $90 a coin. So the former stock trader in me was like, okay, I think this technology is really interesting. It just dropped a bunch very quickly. I know that when that happens, it tends to be a good time to buy. Excuse me. So I started loading up with as much as I could afford um, by then at that time. And I was just so excited about the technology itself and the possibility for rebuilding new economic ecosystems that treated people better, that could be available to us because the technology existed. And that's why seeds came to exist, to help people in need and uplift people through giving and, make it so that you don't have to sell all your assets, like I said earlier, to cover your bills, because you can redeem a seed to ask for help instead. And so that option is available to you at least. So I was just so excited about what it could do, and how it could counteract discrimination and misogyny and racism baked into the old system, some of which I'd seen myself firsthand when I was working as a professional stock trader. So yeah, and then as the shows here, it went up a lot in pretty soon thereafter, heading into the end of 2013 and into January of 2014. But then in I think it was mid 2014. Let me see if I can find an article for you. It would be more interesting if I could show you more visuals, wouldn't it? Um, so this is kind of helpful to be aware of, because just as we saw this past cycle with Sam Bankman Fried and FTX being in the news constantly, like, y'all, I remember seeing an article about, like, it was just about what he had on his desk, and it said like what kind of chewing gum he uses, and I think it said he had Adderall on his desk. Like, the level of coverage of this person was so excessive. And yeah, it he just dominated that news cycle through late 2022 and through much of 2023 until very recently when he was sentenced to 25 years in jail. So back in 2014, so in this first cryptocurrency cycle, we had a different version of that. So back then, it was something called Mt. Gox. It was one of the first cryptocurrency exchanges out there. And back then, I think there were three cryptocurrencies. There were Bitcoin existed, Litecoin existed. By the way, I also made a Litecoin trade in 2013, and it, as the cheaper cryptocurrency, was much more profitable. So that can be a tip that can help you out going forward too. Cheaper cryptocurrencies can often be much more profitable in these market cycles. Bitcoin and Ether will probably still go up considerably, but even cheaper cryptocurrencies have shown us in the past that they'll go up even more. And Litecoin did that back in 2013. So yeah, there were just a few cryptocurrencies around. Doge was introduced in December of 2013. And I think there was something called Digibyte that was around. I don't even know when they were founded, prior to 2013 though, I believe. So this was like one of the only exchanges. Coinbase was founded in 2012. So people would use this weird exchange that had like a bad user experience to buy Bitcoin. But the thing about centralized exchanges like FTX and like Mt. Gox here is that when we're using centralized exchanges, they have custody of our money. We're used to that. We're familiar with how that works because we've used banks for hundreds of years, if not, I don't know when the first bank was founded. Um, I can't imagine it's more than 1,000 years ago. And when they founded the US, they sort of just replicated, what the British banking system was doing. So it's not like there's been a ton of innovation in the banking sector in a long ass time until the introduction of cryptocurrency with the introduction of Bitcoin in 2009. So something that is really important to understand as you're getting into the cryptocurrency sector is the difference between centralized exchanges like Mt. Gox, like FTX, like Coinbase, Gemini, Binance, crypto.com, any exchange that you're using that does not give you access to the private key for your wallet or the mnemonic for your wallet, that's a centralized exchange and they have custody of your money. When we're dealing with banks, that can be at this stage of the game less problematic because banks are regulated. We have in the States, we have FDIC insurance so that if a bank goes under, your deposit is still insured up to $250,000. But we still see bank failures, centralized bank failures. Last year, Silicon Valley Bank failed in like March. And what was really annoying to me and made things harder for seeds was that when we had all this negative press about FTX and so forth in the last like year and a half or whatever it was, almost 2 years, maybe year and a half probably is more fair. Um, they didn't talk about the fact that it was a centralized failure, that people knew it was fraud, I think. But there wasn't this understanding that if you're truly using decentralized tools, which allow us to actually keep custody of our money, then like that can't happen. So centralized exchanges are helpful and still necessary because we're frequently going to need to buy cryptocurrency with fiat currency like the US dollar or the GBP or the South Sudanese pound in order to transact, in order to like deal with our daily expenses. We're probably still going to need to do that. So we need to do that on a centralized exchange. But as soon as you make those purchases, it's a good practice to get your cryptocurrency off of the centralized exchange and immediately into a self-custody wallet that you control. The self-custody wallets that I use most frequently are Coinbase's self-custody tool, which is different than their centralized exchange. So you can see that here. And I also use MetaMask. When I want additional security, I will use a multi-sig wallet like Safe, Gnosis Safe. I'll show you that as well. And this provides an additional layer of security because it requires that multiple wallets, you can choose how many wallets you want to sign in order to authorize a transaction. That's why it's called multi-sig. And this way, even if one of your wallets is compromised, theft shouldn't be able to happen because it's going to be, what are the odds that they'll be able to get access to both of the wallets that are required for a signature in order to access your wallet? I've said this a bunch before. I have never used a hardware wallet. Examples of that are Ledger and Trezor. I've never seen a need to do that. I find that they're offering dubious additional security when really what you can do is just keep your stuff offline. You can keep your private key offline in a safe place. And that's been sufficient for me over the last whatever 10 and a half-ish years in owning cryptocurrency. So I think that's been enough. If you feel that you want to use a hardware wallet, you got to do what's right for you. But I've never seen that need myself. So yeah, when I'm talking about Mt. Gox, they're a centralized exchange and they failed in 2014. And this is what, if we're talking again, this is February of 2014. That was earlier than I realized. So if we're looking back at the cycles, the market cycle then, so we hit highs in late 2013 into early 2014 because, as I said, I remember selling Bitcoin for around $1,100 in January of 2014. And then this Mt. Gox thing happened and that tanked the market. So the FTX thing is not the first time that we've seen a version of that happen. And it was super similar, y'all. I mean, it was just like, it was an American founder. He was living in Japan, and same thing as what happened with FTX, and as with every bank failure that we've seen in the past, where banks take in our deposits and then they reinvest our money somewhere else. And sometimes when they're not doing that properly, they invest poorly and then they can't return our deposits to us. And that's when bank runs happened during the Great Depression and a lot of banks failed. That's why in the United States, they had to introduce tools like the FDIC to ensure consumer deposits. Um, but that's a centralized entity, the US government backing up other centralized entities, banks. Instead of dealing with that and its flaws, what I believe strongly is a better solution is simply to use decentralized tools so we can keep our assets safe ourselves. And when you have custody of your cryptocurrency, when you're holding it in a self-custody wallet like Coinbase Wallet or MetaMask, you can also invest it at the same time and earn more on top of, you can earn more with your money. You can earn a passive income while retaining custody of your funds at the same time. That's what staking is. If you're truly staking in DeFi, this is an example that I shared the last time I did a live. I talked more in depth about DeFi and staking and how that works. But so this was a position that I had staked on Uniswap, which is like the pioneering DeFi platform, which is, its development was so exciting. It really solved a huge problem because it made it so that we could trade without having to rely on like two rich guys, rich white guys usually, behind a platform. It was this antidote to centralized exchanges. And so, yeah, you can see this here. This was a position that I created and I earned, you can see, over $1,400 in fees on this particular position. And as I recall, this happened in like a week and a half. So this isn't going to happen all the time. And you'd have to be, this is a bit more of an advanced strategy. And you'd have to have more time and attention to devote toward managing a strategy like this. But yeah, if you're making this return in a week and a half, that's about the best thing you're gonna find. You know, like that's a really amazing return. And we can do things like that on decentralized platforms like Uniswap, again, while holding custody, while retaining custody of our funds at the same time, so that something like the FTX collapse or the Mt. Gox collapse cannot affect us. We're not going to be hurt by a centralized failure when we're using decentralized tools and retaining custody of our money through the usage of a self-custody wallet. So there's that. So that was the first cycle. And then as we're heading into the second cycle, the second Bitcoin halving in July of 2016, a big thing happened in that Ether was introduced. And as I recall, I believe Ether was introduced in July of 2015. Um, when did Ethereum launch? I think it was July of 2015. Let me see if I can pull that up. Yep. So this was a huge deal because Bitcoin, you know, it's the pioneering cryptocurrency. It's the oldest cryptocurrency. It's more than 15 years old now. The story or whatever is that Vitalik Buterin, who is like the most visible Ethereum founder, Ether's the cryptocurrency and Ethereum is the crypto network. He wrote for Bitcoin Magazine, I believe, and he's a software engineer. And he was like, it's cool that, you know, what Bitcoin's doing is really interesting. But I wish that we had a crypto network that made it easy for software developers like me to build on top of the network. And so Ethereum was introduced with that intention. They introduced something called smart contracts, and the idea was to make it easy for other projects to build on top of Ethereum. And that's what they did. So they launched in July 30th, on July 30th of 2015. There were issues heading into 2016. They had to do what was called a hard fork to address some technical problems. And I think that was in, I want to say late 2015, but I can check that out too. So this is a big deal though. If we go back to um, our halving dates list. So the halving was in July of 2016 and things started picking up. And this, I would say, in this particular cycle was largely because of Ether, because so many cryptocurrency projects were launching on top of Ether. And it took a little bit of time to pick up speed. Let's see. Yeah, let me show you this real quick. So this is when we had the hack. Yeah. So on the 20th of July 2016, right around when the Bitcoin halving was happening, there was this enormous issue in the Ethereum ecosystem, but Ethereum was still new. It was like a year old at that time. So they had to do what was called a hard fork to address these technical problems, as I said. But then after that, things started picking up in terms of price action more so. And in 2017, I started buying Ether in February of 2017 at about $7 a coin, $17 a coin, sorry, as I recall, after they'd worked out these issues. And that year things started to go crazy because people were doing what they called ICOs, initial coin offerings. Like, if you've heard the phrase, you've seen the acronym IPO, initial public offering, which is what that's what it's called when somebody launches a stock in the stock market for the first time. So many cryptocurrency projects were doing this because they were minting tokens on Ethereum. Seeds was one of these projects. We minted Seeds in October, I think, of that year, 2017. So things started going crazy. And with every bull cycle, when things have gone up a lot, it's always a good idea to be aware that what you're always going to see invariably is like new projects popping up, trying to take advantage of the fact that the market's going up a ton. And we got to be aware when that's happening and be especially like diligent about making sure that a project we're interested in is of good quality and is not, like an ill-intentioned project just trying to make some quick money, because it can be easier, like way easier to do that when the market's going up. So we're definitely going to see more of that as the market cycle turns and as things head up. We'll probably see more meme coins. Um, I've talked about this before, but like you can try to play those if you want, and sometimes you can make some money if you time it well with like social media announcements or something. But um, it's a good idea to get clear on what you value and what your goals are, both financially in a broader sense and also in terms of cryptocurrency trading, because then that can guide you to which cryptocurrencies you want to trade. And that, I just find that to be really helpful because it allows you to be a more proactive trader instead of a reactive trader. So I'm not interested in meme coins, for example, if I'm using myself. I checked my ego last cycle when there was so much hype around Doge. But I've said this before. I knew one of the Doge co-founders a little bit. We hung out a few times in San Francisco in 2014 because we were in the crypto sector. And he's a socialist from Australia, and he was horrified to see that like Elon Musk was like grifting his cryptocurrency on Twitter years later. His girlfriend was this like feminist anarchist. Like they were like kind of like radical, politically speaking. And he made Doge as a joke to make fun of cryptocurrencies and the fact that it got like appropriated kind of by a hyper capitalist like Elon Musk. Uh, It was kind of this weird, scary thing. And I don't think that what happened with Doge I don't think that can be replicated. Like Elon Musk has fallen from grace. I don't think there's another person like that I can think of who would, first of all, that would grift in the way that Elon Musk does. And like, yeah, it just seemed like that was sort of I don't see that happening, a version of that happening again in the same way. And that was probably, you could have played that literally off of Elon Musk tweets. But then it's also like, is that something, I don't know. I don't want to, it's okay to make money, of course. It's okay if that's your financial goal and that's the entirety of your financial goal. But I don't know, the ethics of that and stuff. Like, that's not something I wanted to be involved in. I'm also like super averse to Elon Musk, though, too. So I'm just trying to say that we'll probably see more meme coins as the market goes up. But my sense is that what we saw with Doge, which is what all these meme coins are trying to reproduce, I don't think it was reproducible. We could see a different version of that in some way this cycle, but if you're trading meme coins, just make sure you understand what they are and that you understand that the underlying value proposition may not actually be there, that it's probably going to be a shorter term trade that you're making based on like social media. And if you're cool with that and you time it properly, you can make profits. But it has to be something that you're interested in doing, that you want to try. So yeah, we had Elon Musk to thank for that in the last cycle. Um, I should speak a little bit to what happened when prices came down after December of 2017. I would say the main cause in that market cycle was simply that like ICO bubbles burst. There were many projects that weren't of great quality, and there was just so much hype about all these projects and people raising a bunch of money to mint their tokens. The vast majority of those projects are not around anymore today. I saw so many projects back then. Like, we're doing our social good thing with seeds, and we've never had a lot of money. Like, we've never, the problem of misogyny in tech has always affected seeds to the extent that I've had to do some very creative things to keep seeds going over the years, because we just didn't have the money that these other projects had, where male founders are often supported much more significantly by tech investors and whatever. That's not the only reason, but that's a big part of it. And so many of those projects, it's satisfying for me to see now because I mean, I can think of one that raised $15 million really quickly then. And they reached out to us not too long after, wanting to sell their project to seeds because they realized that they couldn't do it. Like, they had $15 million and the project didn't really make sense and it wasn't going to create value longer term. And there are a lot of projects like that back at that time that have since failed. So, yeah, it was just that bubble bursting, I would say. There were a couple failures. I think BitInstant was one cryptocurrency exchange that went under. I might be getting my dates confused, but I think that was around that time. But as I recall, there wasn't sort of like a big centralized failure like a Mt. Gox or an FTX that happened after December 2017 that really sent things back down. It was more like there were a lot of questionable projects that issued ICOs. And so that bubble just couldn't sustain at a certain point. Things had to get real and the market had to realign itself with, like it needed a closer track the actual value of what was being created. And so that's what happened. So then we were hanging out and waiting. There was another crypto winter, as they call it. And what's good about those downturns, I should say, is that it clears out the junk. When when the market's going crazy, as I mentioned, we're going to see more like questionable projects appearing. But those projects, if they don't have a good foundation, if they don't have, if it doesn't make sense, if it's not, the ecosystem isn't logical, they're not creating a product that is actually adding value. If they're total scams, those projects go away. They get cleared out during the crypto winter. So even though it can be annoying or like a pain to have to wait as we're going through these cycles, it's a really amazing time to buy because prices are down, and that's how markets work, right? When people are more skeptical about buying something, the prices are going to be cheaper. So when the crypto winter is happening, you can set up something like DCA, dollar cost averaging, and continually buy at regular intervals during that period so that you're loading up for, the next moment when we expect that the cycle has this likelihood of turning around. Um, so, coming into the last cycle, just briefly, which kicked off with the halving in May of 2020. So, it was an interesting time in that, as we all know, COVID was happening a couple months before. We shut down was whatever it was, May 12th or something, March 12th or something of 2020. And y'all, I remember, I believe it was March 9th, the stock market just dropped a lot, the US stock market, because we were going to be heading into lockdown and people didn't know what then President Trump was going to do. And there was just so much uncertainty that people took their money out of the stock market. And then cryptocurrency followed suit the next day. So we saw lows. Um, it dropped a lot right around that time. And then we had the halving in May 2020. And by then, we had more certainty in that we could see that governments and a lot of places were trying to get money to people, even if you couldn't work. There was easier money was available for people in many developed countries. And so that contributed as well. And then things really started kicking off. heading into 2021. NFTs were a big deal that cycle, if y'all recall. Um, there was this Beeple NFT. Let me see if I can pull up the New York Times article. Yeah, check this out. So maybe you saw this when it happened. Um, and when was this? Let's see here. So, as I've been trying to touch on with each cryptocurrency cycle, there have been sort of other drivers of the big market surges. So, if it was ICOs in 2017, initial coin offerings, it was NFTs, I'd say, non fungible tokens that, people can use to make and sell art. That was a huge driver in the 2021 cycle. So if we're looking at this article, this came out March 12th, 2021, early 2021. So yeah, this artist Beeple took advantage of sort of the height of NFT mania and sold a piece of work for $69 million. And there were a lot of other much there was a lot of art that wasn't maybe made with the intention of being of good quality, like fucking like uh, I didn't keep up on a lot of it, but what was it, ape whatever, Bored Ape Yacht Club, that those existed too, and you could mint these pretty easily and sell them, and some people made a lot of money. And then there was a lot of backlash because people would say like, "Oh, these are just JPEGs. Like, why are you paying so much money for a JPEG and whatever?" And the market just couldn't hold, and eventually it came back down as people were became more and more skeptical about like what the true value of an NFT actually is. That I think was unfortunate in some ways. I mean, we need to get artists involved in cryptocurrency. And NFTs were a way to do that. And I think there still can be use cases that are cool and that are interesting, because it's true that only one person, like you own that NFT, and there can be digital copies of that made, as there can be with anything, that has a digital image that's available on the internet. Um, yeah. So I would say in that cycle, that was a big part of what fueled the market then. But then we also had, as I was saying earlier, like Elon Musk and Doge, and Elon Musk being on SNL and talking about Doge. And I remember the New York Times incorrectly stating that Doge was Elon Musk cryptocurrency. Like, it was that bad in terms of like mainstream reporting and fact checking. And then when we came into 2022, the market turned again. And I would say that when the market came back down in this last cycle, the main reason was first the Luna Terra collapse. So this was a flaw in, actually, let's look at this. This dude, Do Kwon, was the founder. Oh God. Okay, so it's just like more ego and more toxic masculinity, I would say, that caused this crash. So he hyped these cryptocurrencies, Luna and Terra. There was sort of a fundamental flaw in the design of those ecosystems, and it crashed. And he went on the run. I don't even know if he's been apprehended yet. Um, yeah. So this was a big deal. Yeah, this article is just about how arrogant this person was. Was Do Kwon arrested? He was arrested in the Balkan nation of what? Montenegro. Yeah. So last year was 2023. So he was on the run for what, over a year, I think. Anyway, not to spend too much energy on folks like this, but this happened earlier in 2022 and the market faltered. And as I understand, this contributed to FTX getting fucked over because they had overextended themselves in investing consumer deposits. And then when the market faltered as a direct result of the Terra Luna collapse, then suddenly FTX was overextended. And they weren't the only centralized entity that ran into that problem in the last market cycle. There were multiple cryptocurrency like investment firms. 3AC was one that I remember that had the same problem. And it caused a lot of issues. And then the market started toppling. And then through 2023, we had so much coverage about FTX and so forth. It was so extensive that, like, I remember I said this on TikTok before, but like I went to get acupuncture in like this hippie town in Massachusetts. I built a tiny house in Massachusetts last year with like cryptocurrency that I got for free from staking. And I was at this acupuncturist, and they had like their menu of like different payment methods they would accept. And it had some joke about how they would accept everything except like it said like Bitcoin and chickens or something. And I just thought it was interesting because it was just like the negative press about cryptocurrency has become so widespread that even this like hippie acupuncturist like wants to make a joke about it in their like pay menu or whatever. Yeah, that dominated the news cycle. And when I was building the tiny house, I was working with like a local carpenter who like lives in the woods, and I talked to him about paying him in cryptocurrency, and he was so like when I mentioned the possibility, he immediately stopped trusting me. Like it was that strong of a thing, which also created issues for seeds, which were super annoying because it was just like these bad actors who were all male behaved poorly, and then it's impacting our social good project that uplifts women. And isn't that a story that we've seen a lot of times over history? It's played out that way so many times and in various forums. And so I thought for a while, like, should we stop even using the word cryptocurrency when I'm talking about seeds? Like, should we not include the word cryptocurrency anywhere on our website? What should we do? And I'm still not sure what the best way to navigate that is through future cycles. But it was really annoying and frustrating to be so negatively impacted by somebody else's bad behavior in that way. You know what I'm saying? So there was that. But again, this was a not good quality cryptocurrency project, and it failed. And then FTX is a centralized entity that also failed. So we want to do some research and make sure we're always getting involved in cryptocurrency projects that resonate with our intuition and our understanding, our logical understanding. So we're using, like both the masculine and the feminine, both sides of the brain to make decisions. And then if you're coming from that place and also, getting information that you need and checking in with other traders that you trust, then we can avoid involvement in projects like that as they appear through market cycles. And we can really take advantage of the opportunity that's available during these market cycles. So yeah, so there's all of that. Let me tap in and see if there were any more questions because we're coming up on an hour. Okay, looks like we don't have any more questions. So if you are interested in trading more actively and you wanted to be a part of our course, we have a course coming up. The deadline to join is April 20th, so a week from today. I'll put the link in the chat and I'll get us back on that screen. Yeah, so here is the link to the course if you'd like to join. The course is effectively free when you pay up front because we include Seeds cryptocurrency with your tuition. So as I mentioned earlier, Seeds went up a lot the last market cycle. And while that isn't a guarantee of future performance, that's another thing. If you're getting involved, obviously when things are cheaper and then they go up a lot, then there can be profitability right there. It's weird to just have my face here like this, but yeah, so check out that link if you're interested. We also have payment plans available. You can redeem a seed to ask for help to get the funds to join the course if you wanted to do that. That's been something that people have done successfully in the past. But like I said, like whatever you do, I mean, I would love it if you help someone in need through seeds. And the link again is in the description to do that if you want, so that you're getting seeds and thanks. You can do that in recurring gifts, and that can function like DCA, dollar cost averaging, so that you're getting seeds at a certain price every month or every week or annually, whatever you want to do. Because when you help someone in need through seeds, you get seeds and thanks at market price at the time of your gift. So if you gave $100 right now to help someone on our site, you get $100 worth of seeds at the price at that moment, at the time your gift was made. I'd love it if you do those things. I'd love it if you join the course. I teach it myself, as mentioned. It's taught live. You can read more about the specifics. It extends over about 3 months in time. I teach it live, but it's also recorded, so you can watch recordings at your convenience if that's better for you. And we have a private Discord forum where we have discussions amongst crypto students. And once you've joined, you also have access to every future version of the course that is ever offered for free. So that can be helpful so that you can, if you want, come back in and kind of stay up to date on what's going on in the cryptocurrency sector, because things can change very quickly. And so that can just be just another useful resource. So it's really meant to be a win-win-win, because the other piece is that it supports our project. I do this so that we can sustain seeds, so that 100% of the gifts that come through seeds, the value of those gifts, can go to people in need. Without the course, we couldn't afford to do that yet. So when you're joining the course, you're also supporting a woman-founded organization that is devoted to helping women in need, and you're getting these other benefits at the same time. So if that resonates, we'd love to have you join. And again, the deadline is a week from today, the 20th, next Saturday. But yeah, like I was starting to say, even if this doesn't feel like it's the right fit for you at this time, please get involved in cryptocurrency in some way, because like I said, I can't stress enough that this is a crucial moment, because we're coming up on the halving in about 6 days. And as we've talked about throughout this session, that is what has kicked off the big market cycles we've seen in the past. And I just can't bear it if more misogynistic crypto bros are the ones that are benefiting from cryptocurrency when this opportunity is right here. I want to see more nice people, people working in social good, people who are artists, people doing work to make this world a better place. I want to see y'all benefiting from this, so you have more resources to make the world even better. That's what this is about. So yeah, if that resonates with you, it'd be awesome to see you in the course. It'd be awesome if you help Seeds in Need, but please just get involved in some way. People in need through Seeds, I should say. Okay, it's a little after noon, my time on the West Coast. Looks like we don't have any more questions, so I'll let y'all go. Thank you so much for your time and attention. I know everybody's busy. There's a lot of different places you could be right now, and you decided to come here, and it's really appreciated. Yeah, so thank you. All right, y'all, have a wonderful rest of your day and take care. Bye.